Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, April 21st, 2009. Well, we're seeing a nice little update on Wall Street. Now, somewhat expected, as we talked about in the Premium Research Center video last night. Whenever you have a large move down like we did yesterday, oftentimes, especially in the middle of this bull run we've had of late, you'll see a little bit of a bounce back the next day. And we had alerted our subscribers to that yesterday and unloaded a lot of our short positions on the market going into yesterday afternoon. So nicely taken a lot of good money off the table there on the short side, and we kind of prepared ourselves for the possibility of this float up market right now, which is what we're seeing. Now the Dow is up about 87 points, the Nasdaq up 27.5, and the S&P 500 up about 12 to 13 points, really 1.5% across the board on the indexes. Now what you're looking at on my chart, folks, is the chart of the spiders, the SPY. And right before we start to analyze based on trendline analysis, price pattern, and time, I really just want to focus everyone on a couple odds and ends, a couple announcements. Number one, this coming weekend on Saturday at 1 p.m., we have a webinar. It's our methodology webinar where we go into all our key levels, all our key calculations. How do you calculate this? How do we know that the market may be falling on this count and so forth? Cycle activity, all that kind of stuff will be talked about and explained in that webinar. Definitely worthwhile to go check it out. You can go sign up on inthemoneystocks.com under education webinars and seminars link. Okay? Secondly, let's talk a little bit about some various plays. First of all, our hidden gems play in the research center this month is right now sitting up about 30+% for the month. Beautiful move. Last month's hidden gem, we had about 3 plays out there. They averaged about 30 to 50% return in 1 month as well. So the hidden gems just being very, very good the last couple months. Fantastic moves, folks. Secondly, just a couple notes. As I mentioned, we had closed out a lot of our short positions yesterday just for this one-day bounce possibility, or whether or not we get a couple-day bounce in this market. We'll obviously update our premium subscribers whether or not we entered more positions into the close today into the research center videos, which are, by the way, 30 plus minutes long these days on hardcore technical analysis. Having said that, folks, let's discuss the technical charts here, and what you can see is the spiders. And by the way, we had an initial gap down this morning. Why did we have an initial gap down? Because there was a lot of fear out in the market from yesterday that the government is going to start sticking their nose in the bank's business again, meaning that they're going to tell them how to run the banks. They're going to start to take their preferred shares and convert them into common shares, and that really worried Wall Street. And you saw gap downs across the board in financials like Bank of America, Goldman Sachs, JP Morgan Chase. All those stocks are gapping lower today, or the morning they were. Now, initially, as soon as we gapped lower, that kind of started to subside, and we got a nice little bid in the market. Goldman led, and Goldman Sachs is always a leader, folks. And I want you to remember that. Notice Goldman Sachs. Look at the rip up. Beautiful bull in spirit of bull flag here, and then a secondary rip in spirit of bull flag again, and secondary rip again, or third rip, I should say, to the upside. So Goldman's been leading this market. One thing you want to note on Goldman, though, guys, don't look now, but you do have some resistance right here on Goldman Sachs. Gap fill resistance on the 10-minute chart. There should be a little interesting area to watch on this Goldman. We'll see if it pulls back into the close. If Goldman gets over this area, anywhere between this 120 spot 50 to, I don't know, right around this 121-ish area, you may see a test of the highs over here around the 122.50 level on Goldman Sachs. But as of now, this is a good resistance on Goldman, and where Goldman goes, generally the market will follow. So keep that in mind, folks. Now let's go back to the spiders. Spiders activity here, folks. You can see the same thing. And really, the interesting thing about today, we gapped lower. Now, Caterpillar, Merck, DuPont had some earnings that weren't that great according to what the market had expected, and they were gapped lower early. Now, a lot of those have recovered. Not all of them, but a lot of them have recovered today. And it all started here, again, with Goldman Sachs. The market gapped lower. The market was down almost 100 points on the Dow. Not a huge gap down, but a nice little gap down, especially on financials. And then initially, Goldman just started to bid up. And as soon as Goldman started to get a bid, the whole market got a bid. The market came up right here to gap fill. This was a beautiful gap fill area. You can see right here. The market paused on that, pulled back, and you had an attempted double bottom. But notice one thing here. You never got to double bottom, and all these down candles are inside this green candle. That's all in spirit of bear flag off this big up move, and you have to be watching for a more upside. And sure enough, what came with it? A massive little squeeze. Now, what did this coincide with? Right at 10:30, what's going on in the market? Well, Geithner. All right, our Treasury Secretary starts to testify on Capitol Hill, and as soon as that happens, people start to buy the market, and the market has continued all the way up since then. You can see big move up right into the 50 moving average. You close above the 50, that's a bullish sign. Watch for the consolidation. 1 bar, 2 bars, inside bars, that's a bullish pattern. That means a breakout most likely coming. The odds are in that favor. Sure enough, there it goes. Where does it go to? Our orange trend line right here at around 84.30, at which point you get a pause, 1, 2, 3 pause, and the market starts to break up again. Now, this market is getting very extended in the near term. All these green candles up with just a minor pullback. It is very extended, but the volume is light. And remember, folks, when volume is light, the markets have a tendency to float up, especially on a reversal day like this, where you've had a nice gap down and then a reversal to the upside. Notice how I just talked about Goldman, guys, and I love when this happens in these videos because it gives you guys kind of like a live hands-on experience for those of you that are interested in the chat room or interested in our research center, because we just talked about Goldman piercing this resistance. This is the Goldman chart I just showed you before. It was right up here. Now look at this pullback. Possible topping tail on Goldman. It's too early to know for sure, as it still has about a minute and a half left. But for the most part, a beautiful little pullback here on Goldman Sachs. Look at that pullback, folks. Oh, man, that's a great pullback. And again, we just called that out off of gap fill resistance. You got to know your levels. Price, pattern, time, and technical trend line analysis. That is my holy book. I don't need anything else to talk about how to make money in the market. You give me the features of a chart. I just need a chart. You show me any chart. I don't care if it's the chart of the price of dirt. It can be anything. You will be able to tell if someone can chart it out. You can tell where it's going to go. And look at this little pullback. And exactly, folks, when Goldman pulls back, what does the market do? Beautiful spider red candle here. Where's it going? First support, which was resistance. Remember, this was resistance, that orange level right here, that 84.30. Now it's support. Boom, like that. Now, if that breaks, folks, you're going to look for the downside here, this yellow moving average with the 50 and the 20 coming together. There's going to be major support here. The 20 will curve up underneath now and go above, so that will be the next support line. Watch for the 20 moving average in the afternoon session as being support. If the market's able to get another bid, folks, you have a possibility of reaching this level, which is around 84.75, and then if that gets through, you're going to look for major resistance at the 200 moving average at $85 on the SPY. All right, now a couple other things I want to talk about. First of all, let's talk a little bit about oil. All right, the USO, which was an interesting one here. This mimics oil, and it is up nicely today. It's up, maybe it's basically flat on the USO. Oil's slightly positive. I think up about 25 cents at this point. Notice how oil's starting to pull back. And this is something I stress to the chat room, folks. When financials rally, when oil rallies, you're going to get a market rally. Just that simple. Those are why? Because they're commodities. And you have a lot of stocks out there that deal with oil, like ExxonMobil, that are big market players, big portions of the Dow, whether it's the S&P, the NASDAQ, whatever it may be. When those are getting bids, the market will get bid. In addition, financials are just that key in this market. So I strongly encourage you to watch those as indicators. And when both of them are up or both of them are rallying, and look at the gap down on oil today. Oil gap down to 43 and change this morning. It was as low as 43 and change. Got a bid. Notice the bull flag right here, guys. In spirit of bull flag pullback, and then off to the races. Now it's hovering above this, consolidating above the 50 moving average on this chart. So just some great charting activity, folks, today. We continue to be dead on with the calls in the research center videos and to the chat room about where to look for long plays, where to short, our cycle turn dates. We had one for yesterday, and look at what happened yesterday. That's all you need to know. We had called it out mid last week, early last week, to watch for that Monday period, and sure enough, that's exactly what happened. So again, folks, I strongly encourage you to join that webinar. You got to learn the methodology behind it. It's probably the most important lessons you're going to learn. It's a 5-hour course, intensive. You'll be seeing the charts. You'll be at your home. You'll be on a 1-800 number. You can dial in from anywhere in the world, so it doesn't cost you a thing to dial in. All right, that's the key. And in addition, you'll be looking at charts. You'll be talking to our chief market strategist, which will be going over any questions you have. It's interactive. He'll teach, he'll discuss, he'll talk. You'll do live charts at the end. It's just fantastic. In addition, the research center, always, guys. I love that thing. It's my favorite there. The chat room is also fantastic. One of my babies as well. I'm in the chat room live, guys, and as you all know, I do the research center videos as well, and have a big hand in that as well. So I do hope you guys come and join us. We'd love to have you in this wild market so you can capitalize and start to learn the methodology behind the calls that have gone on now for 2+ years, ever since we started to call for a major financial collapse back 2+ years ago, and we were dead on that. Take care, guys. Have a wonderful, wonderful day.